morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, September the 10th. I hope everybody had a great weekend. Back to work. I would officially imagine that most of the larger hedge fund guys, money managers are officially going to get back to work and get their money to work in the markets, whether it be long or short. But now the holiday week is over, and we're looking forward to some pickup in volatility and activity. And we did see a little bit of that Thursday and Friday. We had the ADP report come out, great, and then all of a sudden Friday was the mishap of all these crazy numbers. Job numbers were terrible, but the markets did rally on that and actually sustained Thursday's rally, basically almost guaranteeing the Fed doing a QE3 on the next FOMC meeting. Now, their stimulus program is looking to purchase mortgage-backed securities in replace of this Operation Twist. So at the end of the month, so we'll see how this formats. But as you can see, every central bank worldwide, every time the market starts to roll over, they talk the market up. So there's no reason fighting the Fed. The trend is your friend. And we're continuing to rise, and obviously we are so overbought. Sentiment is extremely low. But again, guys, can't fight the Fed, and that's why I say, I like to take a step back and go kind of slow and look for sectors and stocks that are moving in relation to what the market's doing, and really try to have no bearing on what the Fed does or what the ECB says. But nonetheless, the markets broke out on Thursday, consolidated on Friday. Look in front of you is the Bartram Momentum Index, and as you can see here, we were overbought at 102, and then Friday we came and just kind of settled in here, having an inside day, which I'll show you moving forward. So most of our, technically, where are we? Most of the indicators are back in overbought levels, but again, overbought is not a sell signal. Just using caution here. I do see some sectors that that I've mentioned before that I like, and that's coal. Coal had a beautiful 2 days. Not really much on volume. I'll show you that. Show you one of the charts. But keep an eye on the coal sector here. Any pullback to see if it's real. If we can make a little higher low from the previous low, then I think it's a stock in a sector that's going to get squeezed going into the end of the year. Heavily shorted, hated industry, but nonetheless, coal is still needed for the electrical companies running their generators and what have you. But I will tell you that's going to be a great sector to look forward to, and that's something that we're going to look at. Let's talk about China real quick before we get into the charts. China is still going to be the canary in the coal mine. I do think China is in trouble, and again, you could. The People Bank of China can actually start talking their markets up as well, and then that's all the end of that. So that's why we don't want to jump too quickly into trades. Test the waters is fine, but we don't want to really start making full commitments on what's going on with the dollar, as far as putting your money to work in that industry, in that sector. But nonetheless, that's something I am watching. Dollar, real quick, obviously took a beating because of what happened with the FOMC. And this week, again, is going to be interesting. I think that the FOMC meeting is expected to be neutral or slightly bearish for equities in this market. And again, even if we do have some sort of a pullback will be healthy. And as we get closer to the polls, you'll see, I think, usually September and October are generally weak for the markets, as well as middle of August, but we didn't see that. We just saw a huge consolidation in August for that little breakout last week. And again, I think the week volume was a little bit better, but we're really going to see what happens now that most of the market participants are actually back to work. Okay, so let's go into the charts, and I want to show you some here. As we mentioned about this Bartram Momentum Index, we were overbought on Thursday, obviously to be expected, and then we kind of grinded. Now, we could grind sideways here, and the markets just kind of chop around and unwind that overbought reading in the Momentum Index. So something to keep an eye on. I want to show you copper. I mentioned copper many times. I said, listen, copper needs to play catch-up, and boy, did it play catch-up in a big way. Now, it's one big candle, a lot of volume here, nice breakout from the symmetrical. So let's see what copper does. Usually a big engulfing candle like this, you'll see some sort of a pullback back into that 200-day moving average, chop around a little bit, and then if it could take out that 364 close, then I think we have some legs. And again, that's always what I want to see, is everything in symmetry of the markets moving higher and all of the sectors that are supposed to move higher along with it then I would feel more comfortable looking to commit to the upside. But as of right now, me personally, totally day trading. Anything I see, I like to buy tight stops and see what we can come up with, during the course of that week. Now the VIX. Interesting enough, I did say to you the other day, last week, I said we have a big black candle, usually reversal, and sure enough, we roll right back down again, and now we're testing this low. So we'll see what happens with the VIX, but the VIX really hasn't been a real great indicator. If you could see, literally back from March, we popped up, we rolled back over again. So really hasn't really done too much. But I always like to see where we are with the VIX. Let's take a look at the put call. Broke out of this bullish falling wedge. Now we're back down to the lower end of this wedge here. So again, extreme complacency, and that's just a word of caution. I like to see something into this nature start to trickle back up again. But when everybody's one-sided and the boat's leaning one way, you got to watch out when something does happen and something does trigger. We have a negative bias here. I think all bets will be off, but eventually, again, can't fight the Fed, and I'm not looking to. So we'll just follow the trend. The trend is up, and look to try to get some stocks that haven't moved or that are consolidating, looking for breakouts. Okay, let's take a look at the China. So we have the Shanghai index actually had a big day on Friday, as you can see as well. So we rallied back up to this big area here, which is now resistance. I think it's going to need a little bit more really in order to break out back above it. But again, we're so oversold, it really is to be expected. So really nothing much here other than a nice little day. I'd like to see this thing start to chop around and also move higher along with copper, and that'll actually get me going a little bit. And speaking of copper, I want to show you the weekly chart of copper, which I forgot to mention to you. This weekly chart of copper here, nice big symmetrical triangle. So we'll see if we can break out. We're at the end of this area here. So we can start really breaking out and taking out that $4 number. That $4 is going to be really key from back up in January, February. If we could take that out, then I think you got something going here with the market actually being healthy. Okay, so that being said, one more chart I want to show you is the NYMO. The McClellan oscillator, as you know, has been really seriously been doing not much of anything, just chomping around from that plus 30 to negative 30, and we're back here at this 35 again. So we are overboard, but this shows me that we have plenty of room to the upside, at least for another 2, 3, 4 day rally before the market really gets tired and looking to starting to roll back over again. And same thing with the bar chart momentum index. Okay. Now, lastly, S&P 50-day moving average, as you can see here, 84% back above the 50-day moving average. Overboard again. Just want to show you a reading. We could be overboard for quite some time before markets start to pull over. So let's go right into the charts. And I want to show you the daily chart here. Actually, let me show you the weekly chart first. Now, here's the weekly chart. To get a little bit volume on Thursday, which is nice. Obviously, Friday tapered off. But as you can see here, we did have a nice big breakout of this 1422, 1424 area. And now we're looking to test this. This is the spiders. Starting to test up above next area of resistance. And I want to show you now, see if I can get into the weekly chart here. Here we go. Now, here's the weekly chart of the S&P cash. And as you can see up here, 1581, way back in 2007 before the crash happened. We are now taking out that 1422-24 area, and our next target is going to be 1455. 1455 really isn't too far away. We can hit that this week, guys. So I would really like to see this. I really like to see the market pull back in here and have an opportunity to buy it here, because as you can see, the risks are high buying into this rally right here. Not that it can't go up any higher, but that's just not my thing. I'm more of a guy that's like to buy pullbacks in a trend, or of course, sell rallies in when the market's actually popping, or when the market's actually rolling over and we're on a downtrend. I like to sell these rallies and then for the continuation of the trend. So again, I like to follow the trend here, but as you can see here, a little extended. We're overboard, so I like to see a little bit of a healthy pullback, maybe 2-3% correction, and then rally, buy these dips into the fall period so we can move forward. So, but that's the weekly chart I want to show you. As you can see, I'll be taking this off now. Now that's the Fibonacci retracements. We've been rallying in this area. We have this bearish rising wedge. Obviously, this wedge is only bearish when it breaks, and now we're gonna change these numbers tomorrow. But now we broke back up here again, 1437. Nice big move from Thursday, and as you can see, when we chopped around, I wanted to show you this. Very interesting. We unwounded our momentum indicator on our stochastics here by just chopping around here, really doing not much of anything. And then now we're starting to hook back up again. So again, the chart's looking pretty constructive. S&P 30. Now I mentioned on Wednesday, and I said, guys, look for the Bollinger Bands are starting to pinch. That means energy's building here. And as you can see here, we've been sideways pretty much of all of August. And sure enough, we did get a breakout. I did mention that the breakout will occur. We just don't know where and how and what side it's going to happen. But as you can see, we broke back above on Thursday, and then we consolidated here on Friday. But Bollinger Bands on the 30-minute actually gives you a good cue that energy is building, and expect some sort of a breakout in either direction. So I just wanted to point that out to you, but a real good indicator here to use in your arsenal. Okay, IWMs. Well, the Russell gauges a nice risk, really healthy. Big blue up above this area here. So again, nothing wrong with this chart except that it is getting a little bit extended. I like to see a little bit of a pullback here before getting involved a little bit more. IYT, the transports, starting to play catch up as well. So again, a lot of bulls, a lot of bullish case here in a lot of these in the indexes and sectors. And as you can see here now, we roll back up again. We're starting to break back above that 20 line in the stochastics. And we do have a lot of work to do, obviously, in momentum and indicators such as the histograms and the MACDs. But something really as you can see, that this is a good sign that at least the transports had followed suit after that horrible guidance from FedEx. Now, two more real quick, and I'll let you guys go. And as you can see here, semiconductors roll back right into support, the 200 and the 50-day moving average, and consolidated within this large engulfing. So that's very normal to see. Now, Qs, we had that double top I mentioned 3 weeks ago, and again, that is not a double top. We would sell the double top at 67.45. That did not break. 2 weeks, it hit both lows, but did not break. So this double top was not initiated. So any type of a setup, a trade setup, we need a trigger. And with that trigger, we don't just say, okay, double top, I sell it, I'm going to just go and look to sell this double top. We need to take out that low, and that low would be that candle right there, that doji, and it didn't happen. So, therefore, this double top would be negated, and Qs are looking really good. Of course, Apple's a big weight of the Qs. Just to show you a quick daily chart here, as you can see, we're moving a little bit forward. So, what I want to show you is one of the coal sectors, and here's the A&R. And as you guys know, A&R, I do like coal. We did break out up in this area here, and we basically sold back down again. Now we have 3 days of volume. But look at Friday. Friday's volume was just gigantic, and this is something that I feel is going to be a big winner going into the fall. Now, take a look at WLT, Walter Energy, real bad. We made a low here on Wednesday, and look what happened. We roll right back up again. So this is CLF. Take a look at this one. Another one. Terrible chart. Look at the chart, and look what happened. Explosive 3-day rally, okay? When they don't like them, that's when you want to look to start buying them. So, again, just giving you a case. If you're looking at some of the coal names, take a look at them. Right now, they did have a big move for the last 3 days, so I'd like to see this market sort of flag, get back up into this area here, hold, make a higher low from the low, and then maybe I think we got something going into the fall. So this is just a sector that I'm looking at, taking a look at, okay? Right, guys, listen, I know a little bit long, but I wanted to go over a few things with you. I hope everybody has a great trading week. Have a great day today, and we'll see you tomorrow morning. Take care.